What is the basis of your trading decisions? We want to invite you to experience and forecast price moves from a new perspective, helping you to participate in up and down movements from any account, even from an IRA. Some claim that the stock market development is a random walk. However, this is only the case when you have no tools to analyze the underlying currents of the happening. What appears like a chaotic reaction often has an underlying structure to forecast the happening with a high likelihood. Our algorithms see the development embedded in the Markov chain, where the next happening is correlated to the last occasion and is not independent, and such allows for a forecast. Let me explain a Markov chain in a simple manner. You see the underlying structure to forecast the happening with a high likelihood because there is only a certain radius, you see those footsteps here, where they can go. And if you see the direction, you have a high likelihood to forecast where things are going. And this is what our AI algos use and consider to forecast the next happening with a high likelihood. High likelihood for us is a likelihood above 65% accuracy. My name is Thomas Baum and I'm your presenter today. I want to make you aware of the risk in trading and that I'm here as a trader and educator, not as a broker, dealer or financial advisor. The name Never Lost Trading derives from the concept of repairing trades. Never Stop Loss Trading was a bit lengthy. We are propagating high probability trading and high probability trading decisions. Let us together check on some market insights. We do that for comparing indexes. What you see here on the chart is the weekly development of the Nasdaq 100. That's a blue-red line, and the S&P 500 over the last 2 years. And you see, since the beginning of the year, we are in a bear market, and bear markets work differently. For more than a decade, we had a strong upside market, but that changed, and with that, you better have adequate strategies on hand to cope with bear market price movements. And we want to invite you with this presentation to learn those. This table here shows the biggest money managers of the US. So you see assets under management in trillions, biggest BlackRock. And what you see also here is the share price development in a year's time frame, 2021 to October 2022. And here BlackRock, for example, dropped 39%. And the stock market is the best scorecard of what is happening. So if you do better than 39% drop, you do well. However, BlackRock knows how to manage money because 8.6 trillion under their umbrella, that is a lot, and it shows it's not easy to keep up with value. Best development, Wells Fargo with minus 16%. Also minus 16% is not a great achievement. So how can we cope with a market that changes direction? We'll have to get out of buy and hold, and we show you instruments and strategies of how to make those decisions, when to change strategies and which one to choose. You now see the BlackRock price development on a daily Never Lost Trading top line chart. And what you spot here is 4 situations we highlighted where you saw price turning points. Our indicators here said, okay, if the price of the next candle is above 629 and 65, which it was, go long and expect after these 2 SPU price move, 1 SPU is 1 unit for us, that the price will hold or extend. Here it extended, and you can use here on the chart that red trailing line for trailing price moves to the upside or to the downside, because you saw here again situation 2, prices turning to the downside, gets a confirmed signal in that direction, and now we are going down. We had a little rebounds here on situation 3, but no buy signal, and again going down. There was a first buy signal here with a potential, and in our environment you'll learn one thing: in a short environment, first leg long is wrong, and so therefore no trade on situation 4, but here we go, there is another opportunity to the downside. If the best money manager in the world has that development over the time, you will need to change your strategy to not have a performance of minus 39% or higher, because the bottom of the market has not yet been found. And you have the opportunity to learn with us how to find crucial price turning points and strategies to trade along with the price development that you see on the chart. Our algorithms work like a seismic reading. It looks at the underlying currents of the happening, and with that extrapolates or forecasts what most likely is going to happen in the future. And that's what we do over and over at crucial price turning points. You see not so many signals, but the one on the chart, they stuck. And this is how we laid it out here on a daily happening for you to choose where are crucial price turning points, where you can turn your trading from the upside to the downside with an adequate strategy. I could go lengthy through explaining this, but I put all the words and details on our blog where you can reread each of the situations and how to act on them. In case you operate from an IRA or cash account, there are certain SEC restrictions for you to short stocks, but we get around them by the NLT delta force concept, where we specified which delta to pick, the time to expiration from the price movement of the chart, and the max price to pay. And if the price too high, we change strategies. These are all learning elements which you learn in our mentorships. If you want to learn more about all this, just contact us. contact@neverlosttrading.com, and we'll get together with you and we see what sticks best for you. Also, I want to do something for day trading, because you know, at times like we have them now, longer term investments are a bit fragile, and so therefore it's good to have the ability to intraday trade. And so therefore I want to give you a day trading example how we do it very different, because for us price movement is the key deciding element. Price is the result of a change in supply and demand. Yeah, so you will have a higher demand, prices rise. The demand drops, prices fall. Relatively simple, or you can move it the other way around. What we did based on that decision is putting price as a center stage. The key deciding element is not time, it is price. How much price move goes from A to B defines of how we are acting in the market, and I'll show you how that looks on the chart. This is our purely price-based chart, and you see multiple opportunities here. It was on October 21 where we took that throughout the day to participate in up and downside moves. This day it was more upside moves. Yeah, you see here price indications to the upside, and we were looking at the gray signals and their performance. So it had a signal here, there was the stop, it was carried out here to the dot, came to target, that happened again here, and it happened again late in the day. So we had three opportunities that all stuck here in that development, and this is what we use those channel for. We didn't trade this one here. This sell signal reasoning was, you see here these borders, those borders cut the price short. This is exactly where the price turned around and moved the other way. So on the chart we embedded a lot of information of how you can decide who's in charge. Blue are buyers, here are sellers, and you see markets going down when sellers are in charge and the price is going up when the buyers are in charge. This is the E-mini S&P 500 contract, one of the great trading instruments for private investors, and between one decision there's about 2 minutes to 25 minutes time for you to place your order, and you know by our dashboard at which price element you put your order, so that you can put a pre-order that is only fulfilled when the price surpasses its threshold, like it's spelled out here, buy above 37.41.80. That was concluded in the price move of the next candle and carried out right to the dot, and with that, that was a winning trade. As a trader, you are handling probabilities, and you only want to risk your money when the odds are in your favor. So let us invite you to two ideas of how to address today's markets. First, as a day trader. Second, as a swing trader, learning how to operate earnings seasons. We're just in the middle of earnings seasons. Yeah, yesterday night Amazon declared and Apple did, and the market reacted on it. and we have 2 publications for you. And we just want you to write us an email at contact@neverlosstrading.com to learn more about day trading. Or if you want to learn more about swing trading, in particular the earnings season, contact@neverlosstrading, subject swing trading, and we'll send you a report which goes much more in detail than we can do here in that presentation. When that sounds right, just contact us or click the button if you see that on Facebook. Yeah, react, I want to know more about it, and we'll get in contact with you and we shoot you the information. Trading is not an easy endeavor. However, it's learnable, and that's what we provide here. We provide the systems, the strategies, and the learning elements you need to succeed in today's and tomorrow's market. So feel free to contact us or come back to our 2 reports that we are giving you for free when you just shoot us an email and you let us know what you're interested in, day trading or swing trading or both, and you will find in your inbox a lot of details and information. We thank you very much for your attention, and we are looking forward to hearing back from you. Bye-bye.